Hello, good afternoon, and you're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, very good afternoon to you. And clearly, the markets are following the trend that you wear in terms of your shirt, right? Because today it's red and starting in the green, then went red, and now at the day's lowest point.
Absolutely, Vinny. I would not say that I'm the trendsetter for the markets, but yes,
I think everyone's going to be telling you to only wear green there. That's the only hope everyone has.
But if you look at the markets, yes, we are at the day's lowest point. 1% downtick from the day's highest point coming in for Nifty 50 index. In a short while, actually, we'll be joined by Kunal Bothra and we'll try and understand the sharp spike in the VIX and what does that indicate for the markets. Because if you look at the India VIX, it has seen an uptick of as much as 10% right now. So if we can show the India VIX chart for you, and you'll see the spike coming on the India VIX as well at this point in time. There you go. 9.7% uptick coming in for the India VIX. Let's talk about the rest of the market. Like I mentioned, yes, you have Nifty that's fallen 1% from the day's highest point. Nifty Bank also has followed suit. That one also has slipped from the day's highest point. Remember that today we have the CAD data, that's the current account deficit for the quarter gone by. That's Q1 current account deficit. And that current account deficit has widened actually on a quarter-on-quarter basis. So yes, that's one of the reasons why also you've seen that downtick coming on the markets. Talking about the advanced decline ratio, very much tilted in the favor of the declines as we speak. In fact, the broader markets also have slipped from the day's highest point. You have a small cap index that has actually now entered the negative territory. You have the mid cap index that's seen downtick of as much as 1%. So yes, a sharp downtick coming in for the mid cap index, falling 1.2% from the day's highest point, and it is actually underperforming the benchmark indices as well. Talking about the sectoral indices, none of the sectors are in the positive territory. So all the sectors are in the negative territory, with the PSU banking index actually declining the least. 0.2% downtick coming in for the PSU bank index, but IT index 1.8% knock coming in for that one. FMCG, media, auto, all of them are actually seeing a sea of red at this point in time. Yes, so not a great picture coming in for the benchmark indices. Remember, the crude prices continue to rise. You have now Brent crude that has surpassed at $97 per barrel mark as well. That's also weighing heavy on the markets. But like I mentioned, let's head across to Kunal. Along with Kunal, we also have a team of researchers joining us on the show today. We have on the research end right now, we have Kunal, Harsh as well as Lisa on the show. A very good afternoon to you, Kunal. And firstly, let me ask you about the VIX. We've seen a sharp spike in the VIX. Has it reached a crucial level? How should one read into the spike that we are seeing in the India VIX?
Well, good afternoon. First of all, may not be a great afternoon for the markets because of the way the VIX has spiked. Yes, it's at a crucial level. So it's managed to break past about 12.5. This was the previous, major swing high closing for VIX. I think in the month of August, from where July-August, from where the first level of correction actually started off for the indices. So this won't bode well for the equities, because more the VIX they tend to rise, the higher or the greater the impact could be on the equity markets, and especially for our markets. If you manage to see a consistent rise on the VIX. So yes, that 12.5 level is very, very important and critical. And this falling on the expiry day also adds to more pressure on the markets, because then you'll tend to have a lesser degree of maybe a higher impact on the rollovers for the next series, for the October series. So all in all, it doesn't look attractive. Let's see how the next couple of hours pan out, because if we manage to close at this higher point of the VIX, then we're probably expecting that the start of the October series could be on a much more tepid as well as a negative note.
Okay, surely an indication that is coming in, but next couple of hours is what we're supposed to watch out for before inferring to more of the details in terms of the October series. But yes, that volatility continues because of the expiry day as well. But on that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the technical front. And obviously, I'm going to be starting with the first stock that is in focus today. We have Upar Industries that's in focus. Now, the main reason for this is they are going to be discussing, the board is going to be meeting today to discuss a fundraising plan. Now, when this was announced a couple of days ago that the board is going to be meeting, we saw the stock rally as much as 7 to 8% in trade. But today, look at the stock move, because we're seeing a fall coming in the stock price. It's down almost 3.8% to 4%. Intraday, it was down as much as that as well. And let's not forget, when you look at Upar Industries in terms of the stock move, the stock is up 344% in the last 1 year. When the announcement for fundraising also came in, that time also the stock rallied and continued to rally as well. But today, a bit of a subdued news. We'll surely wait out for the amount of the fund that the company is actually raising, the board is looking to raise, what is the purpose of that as well. These are the factors we'll watch out for once the release comes in. But as of now, today the stock is down and out in trade, decline of almost 4% in trade.
All right, moving on, let's talk about a bright spot in an otherwise dull market, and that's Phenox Cables, because that particular is soaring in trade today, saw an uptick of as much as 9% on an intraday basis to hit an all-time high level of 1,219 rupees per share. The reason why Phenox Cable is soaring in trade today is because the media reports indicated that the Supreme Court has permitted Orbit Electricals to vote in Phenox Cables AGM. Remember, Orbit Electricals holds approximately a 30.8% stake in Phenox Cables, and the court order dated September 26 comes ahead of the company's annual general meeting. This also comes among the dispute between Prakash Chabaria as well as Deepak Chabaria. This is what the reports are indicating. Both these individuals have a stake in Orbit Electricals, and they are actually fighting to gain control of Phenox Cables, is what the reports are indicating. But for now, that's one of the reasons why the stock is soaring in trade today, still holding on to strong gains of 6% in an otherwise weak market.
Let's move on to the first stock on the technical front, and Kunal, you picked out HDFC Bank. Now this one, obviously we all know that has not done anything exciting in the last 1 year, 6 months in terms of a move that we expect. Now HDFC Bank, what are the charts indicating for this one? Is it going to see a brighter side anytime soon?
Let's hope for that to happen, Vinny, because the stock apparently has come back towards tapping a major support point, a psychological mark of 1500, a previous major support closer to 1530, 1535 for HDFC Bank on the long-term charts. That was in 2022 end when the stock had gone through a correction. Even a major retracement support, which also coincides with the stock at closer to this 1500 mark. So it looks like that the stock has probably found or has come back towards a major support zone. Now the good part is that the selling which had started off for HDFC Bank, I think start off previous week when the stock was at 1680 levels, that selling has halted. Now the stock is not participating on a major corrective wave, even on a day like today, for example. This indicates that maybe the stock could be at a near-term bottom for itself. So 1500 remains to be a crucial support, a major support for HDFC Bank. If the stock holds on to this level, I would expect a steady recovery going forward for the stock.
All right, so that's the word coming in on HDFC Bank. But Lisa, let's talk about SJVN, and why is this particular counter in focus today?
Cheryl, so SJVN is in focus as it has commenced the mechanical spinning of its hydroelectric power project, which is in Uttarakhand, and this project will be generating around 265 million of electricity annually. So it affirms the company's commitment towards achieving a 50,000 megawatt by 2040. So SJVN, being a generator as well as seller of hydroelectric power, it's greatly expected to benefit from this project. And talking about the stock price movement in the last 6 months, the stock has more than doubled from 33 per share in February, and now it's like around 70. And even recently, the stock has seen an up move after it signed an MOU with Power Finance Corporation, but it was under pressure after its OFS of around 4.9%, where the government had planned to sell around that much stake. Even the analysts are quite bullish about the stock going forward because out of all the analysts, 5 analysts tracks the stock, and 100% of the analysts, they have a buy rating on the stock. So that's SJVN. It's trading with a positive bias in today's session.
Okay, let's move on to the next stock for today. That is Tata Power. Harsh, why is the spotlight on this one? What is the news, sir?
Right. So Tata Power announced that their Tata Power Renewable Energy is set to set up a 41 megawatt captive power plant for TP Solar Limited. Of course, this captive plant is expected to generate around 101 million units of electricity a year, offsetting around 71,500 metric tons of CO2 emissions. And on the back of that, in a weak market, in fact, we did see Tata Power gain in trade earlier today as well. It's still pretty much flat in trade. But definitely positive news. It continues to pour through for Tata Power.
All right, let's stay with the power space then. Kunal, BHEL, this has been your personal buzzword for the last 6 months or so. You've only spoken about how bullish have you been on the stock. 84%. I'm sure this actually kind of gives a kind of vindicates or rather gives a push to your conviction on this particular stock. You are still convinced that this can go higher than these levels?
Yes, Cheryl, so I'm pretty much convinced that the stock chart on the technical front looks extremely attractive, poised for a very strong upside, hopefully going forward if the market also remains in a more stable or in a fine fettle. Now, BHEL, and the reason for flagging off the stock today is because of the recent correction the stock has shown. So I think from 148 or 49, that was the high the stock had made. It had come back towards 120 odd mark. From 120 yesterday and today, it seems to be the first signs of indication that maybe the stock has found a base and is now getting into a decent rally mode. I would probably expect the stock to maybe try and retest at 122 mark maybe one more time, but if it manages to hold on to this level, I would expect the stock to get back into the thick of uptrend and try to challenge back above its previous highs of 148. So maintain that bullish stance on BHEL. Maybe in the near term there could be a slight better opportunity to try and enter or accumulate the stock at lower levels.
Okay, surely looking out for BHEL, but let's keep an eye out on that. Moving on to the next ones, we have the EMS names. Whether you look at Syrma SGS, Keynes Technology, both these are in focus. Why? Because we have a note that is coming from Macquarie. Actually, they met with the management and there are some key highlights that have come in. Now, for Syrma SGS, when you talk about it, what Macquarie is highlighting that when they spoke management, they said that the management believes that Syrma SGS is going to be benefiting from a growing domestic demand that we have seen. Focus is going to be on localization and export opportunity for global customers as well. Management's focus is to design and lead the approach of contract manufacturing. Other than that, in terms of Keynes, also the key highlights that came in over there, the management believes that Keynes will benefit from the same localization of the electronics as well as electrical manufacturing. The Make in India format that has been working out well for these companies, as well as management's focus is going to be on non-consumer industries as well as the lower volume as well as high margin industry products. That's what Keynes is going to be focusing on as well. And when you look at it, for Keynes, they've given a guidance of around $200 million for FY24 revenue, targeting a $1 billion revenue by FY28. That's the estimate that they've given as well, and expect to sustain the low teens percentage margin going forward as well. FY24 revenue growth guidance for Keynes is in line with what the industry was expecting, and a double-digit EBITDA margin as well. So on the back of that, today we've seen both these stocks buzzing in trade. Look at Syrma SGS, right, up 7%. Keynes holding on to gains of almost 1% as well. So keeping an eye out on this EMS industry, Sharon.
All right, so that is EMS stocks that are in focus. But apart from EMS, that has been the buzzword. Along with that, you have crude stocks or crude related counters that are actually in focus. They have been focused in the middle, talking about the fact that the crude oil prices had dipped and these companies would have benefited from lower crude oil prices. But 3 months now, and you can see what is happening with the crude oil prices. $97 to the barrel is where Brent crude is perched at. You have WTI crude that is soared to $95 per barrel, and this actually weighs heavy in on the OMC counters like IOC, BPCL, HPCL, all of them declining in today's trading session. On the flip side, it is positive for counters like ONGC, Oil India, as well as Reliance Industries. But as you can see, Oil India is soaring in today's trading session. And not just that, higher crude oil prices also means an impact for companies that actually use crude derivatives as their raw material. So you have paint counters that are in focus, like Asian Paints is down and out in today's trading session. You have Berger Paints that is down as well. Along with that, you have tire companies also. This doesn't bode well for the tire companies, as well as the specialty chemical companies that use crude as a raw material, crude derivatives as their raw materials. So yes, a sharp rise in crude oil prices, and you can see all of these counters actually bearing the brunt of it, apart from ONGC and Oil India that are bucking the trend.
Okay, let's move on and talk about Manappuram Finance on the charts then. And Kunal, Manappuram Finance, what's the chart pattern actually indicated here? Last 6 months, we've seen almost a 30% return that has come in for this one. Especially in the last month, when you're looking at the chart right now on the screen, it seems like a sharp jump up. It's come in that last couple of months itself. What is it that you are understanding in terms of the technical levels here?
It's developing now to be a very good chart to look at from a positional play. Now, 2021 end, that's I think in December 2021 quarter, where the stock was almost at 200-220 mark. From there, the stock had seen 3 consecutive quarters of selling, and from 220 levels, the stock had fallen to I think 80-85 mark. And post that, we've seen successive 4 consecutive quarters of price uptrend. the stock has managed to retrace 50% of that correction from 220 mark to 80 levels, and is now trying to come back towards the 150 level. 150 apparently has been a good psychological resistance for Manappuram, but the last 2 days of momentum indicates that hopefully this time around that 150 mark could be taken out. The only concern which happens into the stock is the occurrence of the stock in derivatives ban, which generally impacts the near-term prospects or near-term trend for the upside for the stock price. So if that doesn't happen for Manappuram Finance, I think it could be a very good buy, and hopefully this time around the stock may not take a pause at this 150 mark, but easily surpass those levels.
Alright, so that's the trade coming in on Manappuram Finance. But Lisa, let's talk about L&T, among the top gainers on the Nifty in today's trading session, and why is this one buzzing?
Cheryl, so L&T is in focus on the back of a UBS note. Now, UBS has hiked the target price to rupees 3,600 from 3,040 earlier. Now, this gives a return potential of around 20% from the current market price, and they have maintained a buy on the stock. So, what UBS is highlighting is that the past strategies that has helped L&T to gain on the capacities as well as scale, but the new strategies that will focus on making L&T an asset-light model. And also the overall domestic infra capex that looks strong. So they're expecting that the management will revise the order book guidance going forward. So that's a positive for L&T, and they also view any weakness ahead of the election as a good opportunity to accumulate the stock. According to UBS, L&T is expected to record a healthy 17% CAGR in the sales growth over FY23 to 26, and on the back of this note, L&T has soared around 1.5%. It was its higher as it's flashing on the screen right now, and it also touched an all-time high of around 3,050 in early morning trade.
Let's keep an eye out on L&T. But let's move on to the next one. And Harsh, you picked out JSW Steel for us today. Why is this one in focus?
Well, yes, a little bit of restructuring happening at JSW Steel. In fact, they had announced this on the 22nd of September itself. That there was a stake which they owned in a joint venture company, 50% stake, and 50% of which was held by National Steel Holding Limited. In NSL Green Steel Recycling Limited, which was the JV company. They have now repurchased that 50% stake and made that JV company entirely a wholly owned subsidiary of JSW Steel. Of course, that irons out the overhang with regard to this particular subsidiary, and therefore JSW Steel in focus on the back of that news.
Okay, let's move on, talk about ICI Lombard, and why is this one in focus today? Why is it declining in trade? The main reason for the decline that we're seeing coming in is that after the announcement came in that the insurer has actually received a notice from the Director General of GST Intelligence, and this is for not paying a tax of GST tax of around 1,728 crore rupees. That was from July 2017 to March 2022. So on the back of that, today we've seen the stock is under pressure as of now, also trading with a decline of 2%, which is at almost the day's lowest point as well. So let's keep an eye out on ICI Lombard after they've received a notice from the Director General of GST in terms of the amount of tax that is not paid, and that is 1,728 crores according to the notice.
Alright, that is ICI Lombard, and why that one is actually sulking in today's trading session. But Kunal, let's talk about Balrampur Chini. And how is this particular counter looking to you on the charts? 12% up in the last 6 months, and the bulk of the gains is come in the last 1 to 2 weeks for the sugar company. Where do you see Balrampur Chini headed from here on now?
Last 3 weeks, the stock has shown, so the first week the stock moved from 400, 398 to as much as 449 mark. The subsequent week, that's the previous week, the stock went from 447 to 415, and this time around the stock has managed to surpass the previous highs of 450 and made a new high of 462, which means that the stock is slowly and steadily moving into the thick of an uptrend. It's trying to make a higher high for itself and trying to make a higher low pattern. So that generally is an indication that maybe the worst could be behind the stock price movement and the stock is restarting an uptrend for itself. So it looks attractive as a chart, as a setup, and 415 could now be a good base or a support for the stock over the near term.
Alright, so that's the view coming in on Balrampur Chini. But let's move on and let's talk about MCX, because this definitely has to be the stock of the day, given the fact that we have been reporting continuously from September 1st onwards on the fact of their new platform. And we've taken you through all the process of the implementation of that particular platform. Now MCX has actually indeed confirmed that they will be launching their new commodity derivatives platform on October 3rd. And post that, you also have the stock that's soaring in trade. You have a brokerage note that in fact has come out from Morgan Stanley, where they're maintaining an underweight stance, but they've given a target price of 1,270 rupees per share on MCX. What they're saying is that the software implementation is in line with the expectations. They need to see the amortization starts earlier, and they will also wait for clarity on the quantum for that. They're also saying the management will continue to make payments to 63 Moons as contracted up to December 2023. And they see upside risks to the forecast from stronger revenues, and sustainability and predictability are key for the company, is what Morgan Stanley is saying. But the stock, as you can see on your screen, 7% uptick. In fact, it has hit an over 2-year high based on this particular development.
The stock is hit a over 2-year high. Last 6 months also, look at the gains that we've seen coming in as well. Last 1 year also, it's not a bad move. It's pretty good move in terms of the move for the stock. Now, Kunal, charts, what are they indicating? How much more upside are you putting in and factoring in for MCX now?
I think this could be a start, Winnie, of a very strong and a possible new uptrend for MCX. The stock looks extremely charged up. It's managed to now surpass about the previous 2-month, 3-month swing highs for itself. In fact, I think it's now come back towards the 2021 highs. 2130, 150 was the high for MCX at that point of time. So it's now in touching distance of surpassing those levels. Exceptional chart, has done reasonably well over the last 2 to 3 months, and even at current levels, I believe that the stock looks very attractive. So my sense is that this may not just be a short-lived uptrend for MCX. It could be a prolonged uptrend for the stock price. The only catch or caveat over here is that it's a high beta stock. So every now and then the stock may get into those odd phases of correction. It's always best to try and take advantage of the correction to add or average further.
Alright, so that's the take coming in on MCX. In fact, we spoke to Amit Chandra of HDFC Securities to understand what does this launch of the platform actually mean for the company. How will it change the revenues for the company? Listen in.
You see the price correlation to the volume. It has been around 55% over the last 10 years. This correlation has come down to 12% in the last 3 years because of the uncertainty around technology. So I think with in the last 6 months, the option volume has almost doubled. And if you see YOY, the option volumes have been 3x YOY. Okay, so the impact of the higher volume will start to reflect in terms of revenues. And we are expecting around 47% CAGR in terms of options revenue from FY23 to 26. So, in terms of our estimate, we are expecting 15-16% growth in terms of the total revenue on a normalized basis.
Okay, let's move on, and Medanta is the next stock that we're going to talk about. Actually, Lisa is going to talk to us about that in terms of why is it in focus and what is the news player. Lisa?
Right, so Medanta is in focus because Motilal Oswal, they have initiated coverage on the stock, and they have initiated at a buy rating with a target price of 840 per share. Now that entails an upside potential of around 21%. So they have cited multiple growth levers for Medanta or global health, as we know. One is that clinical excellence that will drive robust operating performance, and even strong demand in cities where Medanta is present. That makes it imperative to add more beds, and they have already scaled up its presence and they are on track to add capacities at Lucknow as well as Patna. Motilal Oswal also highlighted that the company has a surplus cash balance of around 500 crore, and that is enough, provides scope for the company to go for inorganic opportunities. So considering the strong operating performance of the company as well as surplus cash, the Motilal Oswal, they are expecting the company's CAGR growth of around 14% on sales, 17% on EBITDA to rise over the next 3 years. So that's global health. It's up around 2% as we speak.
All right, so that is global health, that is in focus. But Coal India, Kunal, how is the charts looking for this one?
So Coal India also is one of the few PSU stocks which has actually started to look very attractive. the stock has is now coming towards a major break of a psychological mark of 300, and I think if I'm not wrong, 300 was the level the stock had last seen, I think in 2017 first half. So this could probably be a very strong breakthrough for a stock like Coal India. This time around, in this phase of the rally, rather for the stock, the volumes have been pretty much high and encouraging. So that's the positive part to look out for in terms of the trends for Coal India. So looks attractive, and possibly another PSU stock which could be making a very strong comeback on a longer term basis chart.
Okay, let's move on to stock number 17 and putting the spotlight on Power Grid then. Harsh, what is the news for you?
Well, yes, so Power Grid continues to acquire assets, couple of assets for which it has been named as the successful bidder under the tariff-based competitive bidding. It's acquired the Ananthapuram Kumul Transmission Limited, which is the SPV, the name of the SPV, and of course the transmission scheme for solar energy zone in Ananthapuram is what comes under this SPV, 2500 megawatts of power. Even Kurnool, which is a 1000 megawatt power project in Andhra Pradesh, comes under this, and it will be doing the BOOT model, which is the build, own, operate and transfer basis model for this particular project. Also, it has won the Bhadla 3 Transmission Limited SPV, which is to establish transmission systems for evacuation of power from REZ in Rajasthan, which is a 20 gigawatt power plant on the build, own, operate and transfer basis under again the bid process coordinator being PFC Consulting under the tariff based competitive bidding. So largely couple of wins, largely stable at the or rather falling in trade, 0.7% down in a weak market, but a couple of wins for Power Grid.
All right, on that note, we'll actually slip into a break on this edition of Market Fatafat. Don't go anywhere, viewers. We'll be back with more stocks to discuss on the other side.